Hi, everyone. Welcome to our webinar today. I'm Heather Devine, the CEO of People Pay Network, and I will be introducing our speaker for today. Justine Little is the Outreach Coordinator for the Access RDSP program at Disability Alliance BC. She supports people with disability to qualify for the disability tax credit and presents to groups around the province about the disability tax credit and the registered disability savings plan. So Justin, welcome so much to our webinar today, and it's really great of you to join us this way. And I'll turn the meeting over to you.
All right, thank you so much, Heather. I'm very happy to be here today presenting to everyone. I work for Disability Alliance BC, and that's a provincial organization. So our office is located in Vancouver, but we do help people located all over BC apply for disability supports and complete taxes for people who have the PWD designation. So we're a good resource to know, and it's just for the taxes that you need the PWD designation. So if you have any questions about applying for the provincial disability income support or the federal, we're a great resource to know about. I'm part of the newest program there, which is helping people apply for the disability tax credit and helping people open the registered disability savings plan. And this work is a partnership called Access RDSP, and it's a project that is funded by the Vancouver Foundation. And we have a couple partners that I'll tell you about throughout the workshop today, but I'll just briefly mention that our partners are Plan Institute and BC Aboriginal Network on Disability Society. And so today I'm going to be talking about the disability tax credit and the registered disability savings plan, as I mentioned. So there's going to be two main sections to the workshop. And before we get too into the content, I just wanted to highlight to everyone that there are some age restrictions for the registered disability savings plan. When I'm talking about the benefit that is the disability tax credit, anyone of any age can apply. There's no minimum or maximum. So people who have children who are born with a disability can apply on behalf of their children, essentially at birth, or people who are 100 can apply for the disability tax credit. There's no age limit for that. When I get into talking about the benefits that people might get from the registered disability savings plan, there are some very strict age limits to when people can access the benefits. So there's no lower age limit. So again, if someone is born with a disability and their parents or caregivers apply for the tax credit, they can open the registered disability savings plan in their early years. But there's a higher limit to when you can actually benefit from the plan and open the plan. So you have to open the plan by the year that you turn 59. That's kind of the lower limit to just opening it. And then to get the financial support from the government through the plan, you need to be in the year that you turn 49 or younger. So I just wanted to highlight those age restrictions early on so that it's clear kind of what might apply to you and what might benefit you. And for those of you who are maybe over the age of 60 and not interested in learning about the savings plan for the sake of maybe sharing it with a friend or a family member, feel free to tune out at that point or come back at the end for questions. I encourage you to sit through it and learn about the plan, because you can be an agent of change and share information about it. But depending on kind of where your energy levels are at today and what your time commitments are like, that's a part of the workshop that you can skip through if you'd like to do that. All right, so I'm going to get into talking more about the disability tax credit now. So what are we going to talk about? the tax credit, who is likely to qualify, the application process, and how to connect and talk with your doctor about the tax credit. So what is the disability tax credit? Some of you may have the credit already, so maybe I'll take a moment here and do one of the polls that I've set up. I'll ask the question, who here is familiar with the disability tax credit?
And you can answer that question on your control panel. I just put the question up there, and there's 3 choices: yes, a little bit, or no. So just click on the answer that applies to you, and your answers will collect with me. If anyone's having a little bit of trouble to locate them, you may want to click, there's 3 words, that webcam, questions, and polls. You want to click on the triangle that says polls, and then you will see the question there. There we go. I think I forgot to hit one button, so the answers is coming in.
All right.
And can you see that, Justine?
I actually can't see the results of the question because
31% of the people said yes, 31% said a little bit, and 38% said no. So
okay, so pretty mixed crowd, and maybe I'll take the time now to ask the second question about the tax credit. Is there anyone who has a disability tax credit here today?
okay. Actually, I had to launch the question that said, is anyone familiar with the registered?
Okay.
That's my
Sure.
fault.
That's okay. Well, let's ask that question then.
All right, looks like everyone's answered. 27% said yes, 9% said a little bit, and 69% said no.
All right. Well, thank you everyone for answering those questions for me. It helps me understand kind of where we're at as a group, so that's great. And it looks like we're a pretty mixed bag today. So as some of you already know, the disability tax credit, it's a non-refundable tax credit. So that means that it can help to reduce the amount of taxes that you pay. So depending on an individual's financial situation, it may benefit them greatly, it may benefit them a little bit, or it may not benefit much, just the tax credit in itself. So this is different from a refundable tax credit, such as the GST tax credit, that whether you're paying taxes or not, and you get the GST credit if you qualify based on your income. So if you're looking at a non-refundable tax credit, how this shows up in terms of how it might benefit a person is at the end of the year when you're doing your taxes, this can help reduce the amount of income tax that you're paying if you're paying income tax on earned income. So again, if someone's main source of income is income assistance or the provincial disability benefit, also known as PWD, you may not get a refund from this tax credit, but there are other benefits associated with it. All right. So some of those benefits are that if you're eligible for the working income tax benefit, if you get the disability tax credit, it adds an extra amount to that benefit. And the same if you're applying for a child and they qualify for the disability tax credit, it increases the amount of the child tax benefit by a certain amount, a specific for children who have disabilities. And of course, the main benefit that I'm going to be talking about today is that it allows you to open a registered disability savings plan. Another thing to know about the disability tax credit is that it can be transferred to an eligible family member or caregiver. So generally what this looks like is if the person with the disability isn't working and they have the disability tax credit, they can transfer that over to a spouse or a family member, usually a parent, son or daughter or sibling, if that person is actively helping to care for them. And so you don't need to be living together necessarily, but someone who maybe drops off groceries once in a while, helps with purchasing clothing, or helps to cover the costs of living. Those are the kinds of support that the Canada Revenue Agency is looking for to transfer over the credit. Okay, so who is eligible for the disability tax credit? So the two things that you need to have it are you need to have a disability that is both severe and prolonged. And so how they define prolonged is something that lasts for 12 months or is expected to last for 12 months or longer. And severe is not quite as quick to be defined, but the CRA, they're looking for something, so they're looking for an individual with a disability to be either unable to do certain activities of daily life, or they require much longer than someone without that restriction to do activities of daily life. And I'm going to get more into what those activities are in a minute. So some of the activities are vision, so people who are blind qualify for the disability tax credit. Speaking, if people have a stutter or a nonverbal. Feeding, and that includes preparing food and eating food. Hearing, walking, eliminating, so eliminating means conditions that consist of an individual having chronic diarrhea, constipation, or frequent urination. Dressing, and mental functions necessary for everyday life. So those are what the CRA has called the activities of daily life that are relevant to this form. And to qualify, you can be markedly restricted, that's another way of just saying severely restricted in one of those, or somewhat restricted in two or more of those activities. And the kind of key thing they're looking for as well to qualify people for the credit is that these restrictions, they don't just happen occasionally or once in a while, but the restrictions happen at least 90% of the time. Another way you can qualify for the tax credit is if you need at least 14 hours a week of life-sustaining therapy to support a vital function. And so an example of this would be someone who requires dialysis, and they need to require at least 14 hours a week of dialysis. Okay, so some of the steps for what it might look like to apply for the disability tax credit is, of course, getting the form. It's a form that needs to be completed by your medical healthcare practitioner. Generally, a doctor or a nurse practitioner are the best people to go to because they're able to speak to all the different functions that are outlined on the form, but in some instances you can bring it to other healthcare practitioners as well. So you can fill out the first page of the form by yourself. It's pretty straightforward personal information. And When you are bringing the form to a doctor, one thing you want to be aware of and discuss before they fill it out is that unfortunately the cost of filling out the form, it's not covered by the provincial government. So you need to discuss what the fee might be. If you are low income, I definitely recommend letting your doctor know that and asking for a waive of the fee or a reduction. And generally, I've had good luck working with the clients that I work with at Disability Alliance BC, asking for that. And the doctors are definitely open to that conversation. Not 100% of the time, but it's definitely worth asking. And then another thing that can really help the application process, if you take a sample of a completed form into your doctor and include a list of your day-to-day restrictions. So these are things that your doctor may not be aware of because they don't, see you day to day through your routine. They just see you when you go to the doctor's office or when you see your nurse practitioner. So it can really help to kind of write out a list, maybe do a weekly journal of what things are happening most of the time, and to bring that in to help your doctor fill out the form. And I always recommend when after you've filled the application out and your doctor or nurse practitioner has completed it, you want to keep a copy of your application in a safe place. It's just a lot easier to keep a copy of it than to request a copy from the CRA. It is possible, but it just takes a real long time. And as you know, if you've completed your taxes in the past few years, now we send all of our personal tax information to Winnipeg, so that's where I mail this as well. Sometimes when you send in the application, the Canada Revenue Agency, they'll decide they need a little bit more information. And so they will send a letter directly to your doctor or nurse practitioner or whoever else filled out the form with some more questions. So it's just good to be aware of. I see the Canada Revenue Agency doing this fairly frequently now. So if there is some delay, it's always good to check in with the person who filled out the form and see if they got a follow-up questionnaire and if you can help them by providing any additional information. And the Canada Revenue Agency, they really love sending letters. So when they do come to a decision about your eligibility, they will send you a letter in the mail, and it will have the decision in it, and it'll have the steps. If they have denied you, they'll give you a reason, and that reason can be helpful in determining what to do next. So it's a good idea to read through that letter when you get it. Okay, so I'm going to speak a little bit about the process of actually talking to your doctor about the disability tax credit. So having some rapport with the doctor is really important. You don't want to take this form to a walk-in clinic or a doctor that you're seeing for the first time. You want to have some relationship with the doctor already, and you want to have them in a position where they have access to your previous medical files so they can review your situation and just feel like they have the confidence that they need to fill out the form. I already mentioned there might be a fee, so it's good to discuss that up front, and definitely let them know if you have a limited income. And the important thing is to get across and to help your doctor get across on the form is that your eligibility and what they're looking for is really not necessarily a diagnosis, but really how your symptoms restrict you on a day-to-day basis. So anything that takes you longer or you need help with or you're unable to do, those are the things and the details that are really important. And it's also really important to include examples from your own life. So the Canada Revenue Agency, they don't just want generic information. They'd love to have an example of something you've actually experienced. Okay, so I wrote some examples of what it might look like when you're putting together the information to bring into your doctor. So something you might want to write down and bring with you when you go into that appointment to ask them to fill out the form. For example, if this was your situation, you could write, I have chronic pain affecting my back and legs. I use a cane to assist with walking all of the time. So the important thing there is you're kind of outlining what the effect is, the chronic pain, where it impacts you, back and legs, that you need to use a cane all the time. So any assistive devices, that's helpful to include. And then an example. So the example here is even with a cane, I take at least 2 times as long to walk somewhere compared to an average person my age without my condition. So this is really the comparison that the Canada Revenue Agency is looking for. Generally, they define like a significant restriction as something that takes 2 times as long, and a severe or marked restriction is something that takes 3 times as long. So these are the details that can be really helpful to include. And then I wrote another example that describes dressing as someone who needs to take more time to dress to avoid triggering pain. And so again, you can see that there's an example, something for that person that is harder, like putting on socks and shoes, and that it takes 2 times as long as well. So these are the kind of restrictions that you could put together, like if someone was restricted in walking and dressing, you could put together to apply under the cumulative category, which I think for a lot of chronic pain conditions, this is a category that's probably easiest to qualify under, because while maybe people with chronic pain are able to do things, it does take longer because of the pain, because the way you need to do it to manage the pain, it just takes a little bit longer, or you need some assistive devices. So I do work with clients directly in my work with Disability Alliance BC, and I have found that for people with chronic pain conditions, this is a category that seems generally, of course not every time, but to make the most sense to apply under. All right. So I'll talk a little bit about the category of mental functions now. So it's probably the more unclear category. It's just mental health is so broad and so different person to person. And the rule that something needs to happen 90% of the time, it's very hard to prove with mental health. There's no kind of test you can take that says you're 90% depressed or 90% anxious. So they're a little bit more flexible with the percentage of the time for this category. And especially for people with mental health conditions that occur sometimes when the symptoms are more severe and sometimes less severe. So people have qualified in this category in the past based on unpredictable conduct, a risk of relapse at any time without continuously displaying symptoms, and an inability to live and function independently. So those are some of the ways people have qualified before, or if someone maybe needs daily supervision or help to remember taking medication. That's another way that people have qualified. On this slide, I'm just breaking the mental functions down a little bit further. And this isn't my personal definition. This is what the Canada Revenue Agency is looking for when people are including information on their restrictions in this category. So one thing they're definitely looking for, and if you have restrictions, they're very relevant to share, is if it takes someone longer to communicate their own needs or understand when other people are communicating. And this could be from really any reason, just as long as it's slowing down kind of that cognitive process. So for reasons such as brain fog or fatigue, which slows cognition. Those are totally valid reasons for having a restriction here. If someone takes longer or is unable to do self-care, including brushing teeth, dressing, that could be for any reason as well, as long as the reason is related to mental health. So if it's a physical restriction, that isn't relevant here, but like, for example, people who are living with depression, it can take a lot longer to complete those self-care acts. Another example is making simple purchases. So if someone has a lot of anxiety, needs help with buying groceries or clothing, or for any other reason it takes longer related to mental health, that's relevant. Making healthy and safe decisions, recalling information. So if there's difficulty remembering things, that's relevant. Setting and completing day-to-day goals like eating healthy or getting more exercise, or anything kind of related to day-to-day health, or any goals you want to set related to day-to-day living, and ability to accept changes and integrate changes into day-to-day routines. Another mental health function that's relevant is an ability to focus on a topic for more than a few minutes. And like I mentioned before, the ability to manage medication. So if people need reminders to take their medication, that's a really relevant restriction as well. Okay, so now we're at the point where you've sent off your disability tax credit application to the Canada Revenue Agency. That's great. And first of all, it's not a fast process. So the minimum amount of time it might take to get a letter giving you a decision is about 3 months. But it's tax season coming up, and it's a pretty busy department, I think. So it very well may take a bit longer than that. If you have submitted an application and you're just wondering where it's at, you can always call the Canada Revenue Agency just on their general inquiries line. And they're pretty good about being able to let you know exactly kind of where your application is in the queue. They won't be able to speed it up most likely, but they'll at least be able to confirm that they've received it and give you just a general update. So when you do get that letter, there's a few different things that might be in it. So hopefully you've been approved, and generally they'll do it for at least 1 year. Most of the time I see letters of approval giving between 5 and 10 years. So the disability tax credit is usually something that is a period of time. Occasionally, people are approved indefinitely, and so what these letters say is you're approved for the credit, you'll only need to reapply when we ask you to. So these are generally for conditions that have very little chance of improving or changing, but sometimes even with permanent disabilities, people do need to reapply every 5 or 10 years. So it's not a ton of logic in the decision-making process there. Your letter might also say they need some more information. This is where they'll let you know if they tried to reach out to your doctor for more information and didn't hear back. And this can be quite a while since you sent in the original application, which is why I recommend, if it has been past 3 months, it's just worth touching base with your doctor anyways, because it might be a few more months before you get this letter back from the CRA if for some reason the follow-up questionnaire was lost on the doctor's end. And then hopefully this doesn't happen, but there is, of course, a risk of being denied if you apply for the disability tax credit. And I'll talk a bit more about that, I think, in the next slide. But just to summarize this one, generally, people are approved, I'd say, for 5 to 10 years. And then at the end of that period, you do need to reapply again if you want to continue to have the tax credit. So if you were denied, you have some options. So you can add more information. And I recommend doing this in a situation where you feel like on what you've sent in so far and what your doctor sent in, it maybe doesn't have everything that's relevant about your health situation. So you have a year from the letter you receive to add more information. And you also can go through the process. Oops. Okay, back to that one. You also can go through the official appeal process. And I would generally recommend this for people who feel like all the relevant information about their health was sent to the Canada Revenue Agency, and the agency just really made the wrong decision there. So to do that, you only have 90 days to officially appeal. So it's something you don't want to just put that letter down and kind of forget about it for a while. So if you want to go with that path, you want to get moving pretty quickly. So it's a two-step process. First, you file the notice of objection, and then that causes them to kind of review the situation again. And if they stick with their decision to deny you, then you need to file a notice of appeal. And you need to do that through a tax court. We don't offer support with the official appeal process. So I can't speak too much about the details of the process, but I know it can get complicated, and sometimes you may need a lawyer to represent you. So just to know that going into the process, it's a possibility for it to get a bit complex. And so as I mentioned before, I'm part of the Access RDSP team. So these are the contact information for where I work, which is Disability Alliance BC on the left there. Plan Institute is a great resource if you already have a registered disability savings plan and you want some information about how to get the most of it, or if you have the tax credit and you want some step-by-step support in opening the RDSP, they're great. BC Aboriginal Network on Disability Society, they work with people who are Indigenous in applying for the tax credit and opening the RDSP, and a great resource to know about as well. And then, of course, if you need some support for applying for the disability tax credit, I work for Disability Alliance BC, and that's what I do all day. And there's some other team members there as well who help with that process. So it can be a confusing process, to say the least. So if you do need help, don't be shy to reach out to us. That's really what we're there for. At times, we can be a pretty busy office, so we may take a week or two to get back to you. We really aim to do that sooner, but depending on the time of year, it can be quite busy, but we will get back to you for sure. So if you do reach out to us, just know it might take a little while to hear back, but we will give you a call within most likely the first or second week that you leave a message with us. And email is a little bit faster, so if you're comfortable with email, if you get that email right there, rdsp@disabilityalliancebc.org, that goes to me. So feel free to email me if you have any questions or would like some support. So that kind of concludes the section on the disability tax credit. And now I'm going to move into the registered disability savings plan. So I definitely encourage everyone to stick around for this part of the presentation. And even if you're over the age of 60, there will be it could still be helpful information to know, but if you're kind of at your limit for the information you can take in, I know I'm talking a bit fast and it's a complicated process, so feel free to skip the rest of the webinar if you are kind of at your capacity right now.
Justine, would it be okay if I give you the questions that have come up for this first half then?
Oh, sure.
There's one from James. He wants to know where, sorry, pull that up again, where you can get the T2201 form.
Where to get the form? Good question. So you can get that from the Canada Revenue Agency website. If you just put T2201 CRA into your Google search bar, it should come up there. But you can also get it through the official Government of Canada website. Yeah.
Okay, and then there's two from Andrew. One is a tax credit retroactive.
Yes, so also great question. The tax credit is retroactive to the year that your disability became severely restricting. And so that's a year that your doctor will indicate on the form. And so you can go back to that year. And the Canada Revenue Agency, they have a general rule that you can only go back to a maximum of 10 years. So if you've had a disability for 15 years, you can go back to 10 years only to get an adjustment. If you've had a disability for the past 5 years, then you can go back 5 years. So yes, great questions. And there's a few more.
There's one more. The same person wanted to know if the CRA contacts the doctor and the doctor wants to charge a fee, does that go back to the patient, or would there be a charge if the CRA contacted the doctor for more info?
So that is up to the doctor again. So sometimes doctors do charge for additional information. And that's something that would be good to talk with your doctor up front about the potential situation of that happening. Yeah, so all the fees related to the form would be the responsibility of the taxpayer or the patient to cover.
Okay. And I just heard back from James, and I think he wanted to know more. Is there a completed form sample for the T2201?
Is there a completed form sample? There isn't a completed sample online, but I do have, I believe I shared it with you, Heather, a resource that does give some direction on how to fill out the form.
Yes, I do remember that. And they went out with the first round of invitations for the webinar that we didn't do. So I will get those resent out to the people who registered today.
Okay, wonderful. Yeah.
Okay, thanks everyone. And if anyone else has any questions, you can see where there's a little triangle a third of the way down your control panel, and you can type your questions in there, and I'll watch for those questions and ask Justine at the end. Thank you.
All right, thank you very much. Okay, so I'm going to dive into the RDSP now. So of course I'm going to talk about what it is, how it works, how it can help people who are living on a low income. I'll talk about how the government will contribute to the plan, and I'll talk about how to contribute personally and how to get the money out of the plan. All right. So what is the Registered Disability Savings Plan? So it was created by the federal government as a long-term savings plan for people with disabilities and their families. And really a neat history about it is that it was actually created as a result of a group of families who were advocating for this plan for some time. And those families were involved with Plan Institute, who is our partner in Access RDSP. So because of their advocacy over many years that this plan was created. And this plan is really unique. It's the first of its kind in the world savings plan for people with disabilities. And what's so great about this plan is that it does have financial incentives to encourage people and families to save money. and they're called grants and bonds. And it's also a great vehicle for investing. And any growth in the RDSP is tax-free while it's growing. So the thing I like to highlight about this plan is that even if you are unable to make personal contributions, so even if you have $0 to put in the plan, the government won't put money in, and then you're able to invest that money and see it grow over time. So it really is a plan that can benefit everyone. Of course, that's where my disclaimer comes. At the beginning, I mentioned if you're under the age of 49. Well, if you're technically in the year you turn 49 or younger, those are the people who can really most benefit from the plan. And to fully benefit, of course, this isn't an ideal situation. So if you are able to open the plan early, you can really get all of the benefits from the plan, even if you're a little later in life, but under the age restriction, there's still lots of benefits. And like the disability tax credit, some of the money you can get from the government, it's retroactive as well through the plan. So even if you're, on the later end of that spectrum between 0 and 49, I really encourage looking into it and setting up a plan if possible. So part of the reason why I spoke at length about the disability tax credit is that it is the kind of major thing that you need before you're able to open the registered disability savings plan. Once you have the disability tax credit, there's no kind of separate application process to get this RDSP. You basically just walk into your bank and discuss what options they have available. It's not that complicated of a process to open it once you have the tax credit. So as I mentioned before, the disability tax credit is kind of the main requirement. You also need to be a resident of Canada, have a social insurance number. There's that tax credit. To open the plan at all, you need to be in the year you turn 59 or younger. And then to get any of the grants and bonds that I mentioned, you need to be in the year you turn 49 or younger. So this plan can help people living on a low income because it doesn't impact a lot of government supports. So if you're receiving the provincial disability income support, also known as PWD, it doesn't affect your eligibility for that at all. So that plan, it's exempt, an exempt asset. And it goes the same with the Canadian Pension Plan disability support. That's a federal disability support. And then once you reach the age where you're receiving old age security payments or guaranteed income supplement, having an RDSP won't impact those. And so that's in contrast with, say, receiving payments out of a registered retirement savings plan. In some situations, payments from an RRSP may reduce the amount you get through old age security and the guaranteed income supplement. But payments from a registered disability savings plan, they won't impact that at all. So basically, it won't impact anything. That's the main point of that slide. So again, just for really highlighting, it won't impact your situation. If you're receiving PWD, it is considered an exempt asset and exempt income when you're receiving payments out of it after you turn 60. So other examples of exempt assets are like the house you live in, the car you drive. Now people who receive PWD, you can personally have up to $100,000 in your bank account and still be eligible for the provincial disability supports. I mean, this is not the situation for everyone, definitely, but you know, in the case of having more than $100,000 in the bank, the RDSP is a really good option. Like maybe there's an inheritance, or you win the lottery, or you're getting a settlement. There's reasons that it does happen for sure. People are able to open an RDSP, put some money aside in there, and then stay under the $100,000 limit in their personal account and continue to receive the provincial and federal disability benefits. So it's just good to know it's an option. I mean, if that's not your problem right now, then it potentially may be your problem in the future, or you might know someone where that information could really help them. So I'll talk a little bit about the process of putting money into the RDSP. So you can set up the RDSP yourself. Process is pretty much walking into the bank and talking to most likely a financial advisor about it there. Generally, the people at the till won't know too much about the RDSP. It's not the most common savings plan, so you'll most likely have to make an appointment with someone who has a bit more specialist knowledge. So just a good heads up when you're going into the bank. And then the person who opens the RDSP for themselves, they can personally contribute, and they can give permission for anyone else to deposit money in there too. So that might be family members, friends, a spouse, whoever they want to contribute money in. They just need to give them permission, and they can do that. So there is a lifetime maximum of personal contributions, and this isn't the limit of how much may end up in your RDSP, but in terms of how much you personally can put in there, and that includes money from friends and family, the limit is $200,000. So there's no annual contribution. You could do it all in 1 year if you wanted, but there's some reasons why you probably wouldn't want to do that I'll get into later. And the cutoff for personally contributing is the year that you turn 59. So you can contribute all year until December 31st. And then the year that you turn 60, you need to start receiving money out of the plan. Okay, so setting up your RDSP. So as we mentioned before, any growth in the RDSP, the tax, you don't pay the tax at the time. So it's deferred. And that means that you pay the tax when you get the payments out later on in life. And generally, later on in life is when people's income is reduced. So you're paying tax based on your overall income. So generally, the amount of tax you'd pay would be quite low. And a thing to know is that while your family and friends might want to contribute to the RDSP, it's not tax deductible, in case anyone was wondering that question. And you can only have one RDSP at a time. So while you can go into any bank you want and discuss what options they have for the RDSP, you can only open one RDSP at a time. Okay, so as I mentioned before, one of the major benefits to the RDSP is the government contributions. One thing you need to do before you get any of that money is to file your taxes, because that is how they assess your income, which relates to how much of the benefits that you get. So people who are lower income get more of the benefits. So if you don't file your taxes, you'll get none of the benefits. So I highly recommend doing that if you have an RDSP. It's good to file them for at least the 2 years before you open the RDSP. And that gives them kind of an idea of what your annual income is like. And then you want to keep filing your taxes so you keep getting the benefits until at least the age of 49, because after that age, you're not going to get any more money from the government. And there's 2 forms of financial benefits that you can get through your RDSP. The first one is grants, and so these are matching grants, so they're triggered by the personal contributions that go in. And the second is a bond, so that's money that you can get even if you have zero in personal contributions. If you're low income, you can qualify for the bond. So I'll talk a little bit more about the grant now. So it's called the Canadian Disability Savings Grant. And so if you maximize the amount you can get, the total is $70,000 over a beneficiary's lifetime. So this is a matching, triggered by matching contributions. And the amount of the grant is based on the family income. So by family income, that refers to the person with the disability and their spouse. And if the person with the disability is under 18, it refers to their parents' income. So in the case of a person with a disability over 18 living with their parents, the family income is only the income of the person with the disability. I'll just like to clarify that because it's a bit of a confusing setup. All right. So what are these matching grants? What do they look like? So if you have a family income of $90,000 plus $563 or less, that's for the year 2016. So the first $500 that is contributed triggers a matching grant of $1,500 from the government. So that's 3-to-1 return. It's pretty great. It's the best deal out there, really, in terms of savings plans. And then the next $1,000 that's contributed into the plan triggers a 2-to-1 grant. So another $1,000 on top of the $500 goes in, and then the government puts $2,000 in there. So kind of the magic amount to get the most out of the plan you want to put in every year is $1,500 a year. Triggers the maximum amount of grant, which is $3,500. Of course, you can contribute less than this and you'll get a portion of the grant, or you can put more in, but you won't get any more money from the government. Okay, so now I'll talk a little bit about the bond. So the bond is for people with low income. And the maximum amount that someone can receive is $1,000 each year. And this is the same with the grant. I didn't really highlight that, but the benefits that I'm talking about, it's not just a one-time thing. You can get that benefit for up to 20 years, or you can get a part of that benefit for more than 20 years if you're not contributing the full amount to max out on the grants. But again, as long as you're in the year you turn 49 or younger. And again, to get the bond, you don't need to put any personal contributions in. So they're not triggered by the money you put into the RDSP. The government will just give you that as long as you do your taxes. So there's no personal contribution required. And so the maximum you can get is $20,000. So it's kind of a 20-year system. And so to get the $1,000 bond, the family income needs to be $26,364 or lower a year. You can still get part of the bond if your income is between $26,000 and $45,000. And again, I have not updated this slideshow with the amounts for 2017. So the amounts, they do change every year. They slightly increase every year. So that's something to know as well. So if you're trying to get retroactive amounts or open an RDSP and you have the tax credit for previous years, depending on what your income was in those years and what the income cutoffs were for the grants and the bonds, it may impact. Some years you might be eligible and some years not, or you'll get different returns on the grants. So here is a slide that looks at some situations and kind of shows you what savings might look like. So you can see in case number 2, in the situation of someone who has about a $20,000 income, doesn't put anything into the RDSP, they don't get any grants because they don't contribute. They still get that $1,000 a year because they're low income, and that can add up to $20,000. And by the time they start taking the money out of the account, it's going to be more than $20,000 because you don't want to just let the money sit in there. Hopefully you're going to invest it, and that money is going to be making some money for you because it's a long-term savings plan. It's going to be in there for some time. So as I said before, the disability tax credit, you can go back for a maximum of 10 years. And there's a similar rule with the registered disability savings plan. So for individuals who have had their disability for 10 or more years, and that's what their doctor puts on the form, if you open the registered disability savings plan, you can go back 10 years and get, if you've been low income during that time, you can get 10 years worth of the bond. So some people that I work with, they get the disability tax credit for the past 10 years, they open the savings plan, and then within a month or two, as it takes a little while for things to get processed, they'll look at their RDSP and they'll have $10,000 in there without contributing any money at all. That's all from the bonds. So it can be a really powerful savings tool, and then that money can start earning interest and being invested right away. And again, just make sure if you're going back retroactively, you want to have filed your tax returns for all those years too. All right, so an example that I mentioned, not only can you go back 10 years, but you can get a bond for the current year too. So sometimes you can end up with $11,000 in your RDSP just by opening it. And you can also retroactively claim the grant amount. There is a limit on how fast you can catch up though. So there's three at a time rule. So you can do 3 years in 1 year period for catching up on the grant. So it's always good if you're in the process of just opening this and you've got a sum you want to deposit, you want to make sure you discuss a plan with your financial advisor to make sure you're not putting too much of that lump sum in right away. You want to kind of measure it out so that you trigger all the grants. So another thing I would like to talk about is the Endowment 150. So this is a program that's funded through the Vancouver Foundation, and Plan Institute administers the Endowment 150. So it's a one-time $150 grant, and you can apply online. It's for adults who are low income or anyone who's under the age of 18. And it's $150 just to kickstart the savings in your RDSP. And the process is pretty fast, and it's a quick turnaround. And even if you've had an RDSP open for some time, you can still apply for this. So it is a one-time grant, but you don't have to have opened your RDSP recently to get it. So it's good to know about. And then that $150 will trigger the 3-to-1 matching if you don't have any personal contributions this year. So it'll add up very quickly. All right. So I will talk a bit about what it looks like to take money out of the RDSP. And I'll just do a word of caution. This, um, if you're opening the RDSP, really you want to talk to a financial advisor, plan it out. Don't just take what I say right now to make all your decisions for you. But this is kind of generally what that process may look like. So first of all, I'll just highlight that the RDSP, it's really designed to be a long-term savings plan. So there are some restrictions on when you can take out money from the plan. So how it works is that there is a string attached to the money that the government gives you for 10 years following the last government contribution at age 49. And so if you take money out before 10 years has passed, the government will take out the portion that has been matched by that money. So the general rule that they've come up with to kind of penalize people for taking money out earlier is if an individual takes out $1, the government will take $3 out. So as you can see, the money will disappear very quickly if people are dipping into it, which, you know, depending on the situation, sometimes people have to do that. But it really should be used as a last resort because the money will disappear very quickly. And so in the case of an individual who has a terminal illness, there is some flexibility. So if a medical professional, probably a doctor, says that someone has 5 years or less to live, then the plan, people are able to access the funds in the plan right away, and they're able to access them quite quickly. So it's good to know there, depending on the situation, there is some flexibility, but it's really only in the most kind of severe cases. So there are some different rules that come into play depending on where the majority of the money in the plan came from. If it's mostly government contributions, there are a lot of rules. If it's mostly personal contributions, it's pretty flexible. And when it's only personal contributions, it's very flexible. There's pretty much no rules. So when it's mostly government contributions, so that's a grant and the bond, you need to begin the payments at 60. You can start before 60, but like I mentioned, there's going to be penalties, and you need to follow a schedule of payments. And so there's a maximum amount that you can take out per year, and that's roughly 10% of the plan's value at the beginning of the year. And when it's mostly personal contributions, so there's no limits on the maximum amount, and you don't need to follow a schedule. So as I said, it's very flexible, and you can choose to follow a schedule if you'd like, but you still need to take at least a minimum withdrawal once you turn 60. So money's coming into the plan until someone's 59, and then at 60, the money has to start going out of the plan. You can also request one-time payments if you have a big expense coming up. And if there's no government contributions, so maybe someone opened the plan after the age of 50, there's pretty much no restrictions. The 10-year repayment rule doesn't apply, so you can just put money in, take money out of the plan. But again, you need to start taking it out when you turn 60. And I'll just go back to the slide for 1 second. So some people will say, well, I'm between the ages of 50 and 60. Should I even bother opening the RDSP, even if I do qualify? And it really depends. There, as I said, there are still some benefits to the RDSP if you're not getting the grants and bonds. And that's mostly how it impacts other supports you might get later in life. So, um, if you're someone who's planning to get some payments through the guaranteed income supplement or old age security, it may be worth your while to go through the process of opening the RDSP and putting some money in, because then those income supports aren't going to be impacted when you're getting payments out, as compared to some other saving tools. But really, it depends on the situation. For some people, there's not a lot of benefit, but for some people, it is worth it. And so that is my slideshow. Thank you so much for tuning in today and participating and asking great questions. And again, these are the contact information for if you have some more questions, or if you need some support in applying for the disability tax credit, or if you want some help in setting up the RDSP. So I'll check in with Heather and see if there's some more questions that have come up.
There's 5 or 6. So how much time are you still wanting to stay with us for?
I'm pretty flexible, so I'm happy to cover all of them.
Okay, I'll start with the top.
Okay.
Sherry would like to know, she believes that she read somewhere that a TENS machine qualified as a life-sustaining therapy.
You know, I'm not sure about that one. Um, yeah, I'm afraid I can't answer that question right now, but I can do some research about it. I know the Canada Revenue Agency, they do have some pretty strict guidelines, so it may be most direct just to call the general inquiries line at the Canada Revenue Agency to ask, and see what they tell you. Yeah, sorry, I don't have more information to share about that.
Okay, Anne would like to know, does qualifying for CPP disability pension makes it more likely you'll be approved for the tax credit?
Another really good question. So, um, there are slightly different qualifications between like the federal disability support and the provincial disability support and the disability tax credit. The fact that someone's qualified for one of those things, it definitely means they're a good candidate to apply for the disability tax credit. But sometimes people can qualify for one and not the other. And there's absolutely no negative repercussions if you do have something like a Canadian Pension Plan disability supports, you apply for the disability tax credit. If you are denied for some reason, it won't impact your support you're getting through CPP. So most likely you're a good candidate to apply, but it's really a separate process and it's not guaranteed.
Okay, Linda, I recognize this name. If people save their receipt from their doctor for the amount paid to complete the disability tax credit form, can they use it as a medical deduction on their taxes?
Yes, so you can claim it as a medical expense, the fee that they may charge. Yeah, good question.
Okay, and can a child therapist do a DTC report for a mental health category?
Good question. If they're a psychologist or a psychiatrist, they can fill the form out. If they're a counselor, then unfortunately, no, they're not eligible to fill out the form.
Okay. And another one here. You mentioned 100,000 in your personal bank account. Does that mean non-registered investments as well?
Yeah, so I mentioned that in relation to still being eligible for the provincial disability support, also known as PWD. So I believe that does include other registered accounts like an RRSP, which is why the RDSP is a really great tool for people who are receiving PWD. So I'm fairly sure that's correct, but I will have to double check on that, and I will ask you not to take my word for it. But if you talk to, if you send me an email at that RDSP at disabilityalliancebc.org, I'll be able to confirm that and get back to you.
Okay, Lorinda had maybe missed this information, but she wanted to know if someone is not a full 90% in one category and they combine 2 or 3 different categories like dressing and eating and mental capacities to a total of 90% of the time?
I mean, this is the more kind of frustrating eligibility to interpret. So really what the Canada Revenue Agency is looking for are restrictions that happen 90% of the time. So those restrictions, they might vary in severity. So it's filling out this application has become a bit of an art form in terms of like how to phrase things. So say dressing, like the restriction fluctuates throughout the day, but how I try and frame it is that it's still there even, you know, when you're having a good period, you're still experiencing that restriction in some way, if that's the case for people. I know people living with, you know, mobility restrictions and chronic pain. You know, we're always kind of comparing things, and a good day for a person with a chronic disability, it may actually be still a day with a lot of restrictions compared to a person without any health conditions. So that's how I try and frame my approach to the form. But of course, if you're have one day where you, if it's something that's really not happening more than like once a week, or it's not present all the time for you, then it would be a restriction that isn't the most helpful to include. You can still include it on the form, but you probably want to include some other restrictions that do happen more frequently to make your application a bit stronger.
Okay, there's 3 more questions on our list here. What happens if a person has federal disability only with an RDSP plan at the bank and then lose the DTC credit before using the money?
So that's another good question. You do need to keep the disability tax credit to keep the RDSP open. So if someone loses the disability tax credit, they do have a bit of time to requalify before that will impact their RDSP. So say I had an RDSP open and my tax credit expired at the end of 2017. I will have 2 years, that's 2018 and 2019, to requalify, just kind of off the bat. And the bank will hold my RDSP open, but I won't be able to contribute and I won't get the bond or the grant for those years until I get the tax credit again. If I need longer than that, I can get a letter from my doctor saying that I'm likely to requalify again for the tax credit, excuse me, and then they'll keep the plan open for 2 more years. Unfortunately, if I'm not able to requalify for the credit after 4 years with a note from the doctor, they have to close the plan. It's no longer registered. They have the authority to keep it open. So they do have to collapse the plan. Any personal contributions, any grants or bonds that you've gotten more than 10 years ago, and any earnings, the person who holds the plan, the person with the disability, will get to keep that money, they'll have to transfer it into their savings account or wherever they want to move that, really. And any grants and bonds that the government has given in the past 10 years, the government will take back at that time. So it is really important, if you do have an RDSP open, you want to stay on top of applying for the tax credit and make sure you know when that's going to run out so you can start the process when you need to.
Cool. And one more. Our daughter is age 11. She's eligible for the tax credit. She will have no income tax returns when we apply for the savings plan. Is this a problem?
So because she's under the age of 18, and they're not going to be looking at her tax returns because most people at that age don't have much earned income. So they're going to be looking at the tax returns of the parents, the caregivers. So just make sure yourself, and if there's another parent involved, complete your taxes for the past 2 years, and they will base what grants and bonds she gets on your income. And so I mentioned there's some, varying benefits. So I don't know your financial information, of course, but if you do earn more than the $30,000 a year, she may not be eligible for the bond. That said, when she does turn 19, she'll be viewed as an adult, and it will just be her income that's assessed, and then she may be eligible for the bond later. So what she's eligible is gonna change once she becomes an adult. But for now, they're gonna look at your own tax returns.
Okay. Then to answer a couple questions together, we have recorded this presentation and it will be on our website in a couple of days. So if there's things that you want to review, you'll be able to do that at your convenience. And you've got the information on the slide here that if you need to get more information from any of these locations, it's right there. And that is all the questions that we have there. And I just want to thank you so much for coming and spending so much time with us and giving us this wonderful information and sharing some possibilities with people that they can help ease their financial situations. So thank you so much. And on behalf of People in Pay Network, we will be doing these type of webinars at least once a month for the next couple of months till summer. And we will send out notices to all of our members. So thank you all for joining this webinar, and please have a wonderful rest of your day. Thanks, Justine.
Yeah, thank you so much.
All right, I will